So how's it going, everybody? My name is Micah Lamar. I'm going to be covering a lot of great stuff for you today, and I've got the little question panel here on the right. So if you have any questions throughout my presentation, feel free to ask. I love interactive webinars, and so I'm happy to help any way I can. Today we're going to be talking about the top 2 money-making strategies. We're going to be giving you some really great strategies. Just out of curiosity, how many people here swing trade or day trade? Just kind of let me know in the chat room what kind of trading you're up to right now and what kind of stocks you're trading, just so I have a little bit more insight into who is listening in today. Because I love to tailor these presentations to the people listening. So the more information I have about what you're up to, the more helpful I'm going to be able to be for you, okay? So quick little disclaimer, Wall Street AO, the company that I run, we're not registered as a broker, dealer, or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. We're for educational purposes only. We're not a trade advisory service. And of course, past results of any trading methodology does not guarantee future results. So what you're going to get today is we're going to focus a lot about entries and exits, because after having thousands of students, this is a place where a lot of people have issues and hurdles. So we're going to focus a lot on that. In fact, I'm going to give you my 3-step checklist for finding the most optimized entries and exits. And I really want to emphasize the word optimized. You're going to find out a lot more about how we do that in today's presentation. We're going to look at 10-year performance. So whenever we look at a strategy and say, okay, well, is this something that we want to use to trade with? I like to look at least 10 years of performance for how the strategy's performed. How well does it do in big upswings, big downswings? I want to look at all of that data, including the batting average, the win-loss ratio. Like, I'm all about the data, and I look at least 10 years of it whenever I'm analyzing a new strategy to look at, okay? So I see Kathleen, I got you here, swing trader and day trader. Richard, swing, no day trading. Got you on GLD, Bank of America SPY. Okay, cool. Michael, Mark, I got you here, a bunch of people. Okay, very, very cool. Thank you for chiming in there. Appreciate you letting me know what kind of trading you're up to. We're also going to talk about the strategy setup, the exact indicators and settings that turn some of these strategies I'm going to give you into my #1 swing trade setups. And we'll talk specifically about how to trade them. I'm a super busy guy. I've got a very busy life. I've got twins. They're almost 2 years old. I run a company. I do my own trading. I'm building a house. Like, I've got a lot of things going on. And if you're busy too, then you're going to find a lot of helpful tidbits in today's presentation, because it's really geared for people who are really busy like me. Okay. So what is Wall Street AO? Wall Street AO is the company that I run, but what are we? Well, we actually started out as a community of stock traders and engineers. And along the way of building our community of traders, we encountered a really big problem. And here's what happened. A lot of people would come to me and they'd say, hey, Micah, so I just read this article on whatever blog, financial, whatever blog, or I heard on the web that I should use the MACD with the stochastics. Do you know if this works or not? And back in the day, I'd say, well, actually, I don't know. I don't know if those 2 indicators work on the stock you're asking about. I really don't know. So they said, well, who does know? And I don't like to ever, leave people hanging. So I was like, hey, well, let's go and find out. Let's go and find out who knows. And so we went to the big broker charts that we get for free, anytime you sign up for a broker. And it turns out most of them actually don't have any way to backtest the MACD and the stochastics together. And so we quickly actually found out that the free charts that we got from our broker didn't really have any way to backtest. And it was kind of unfortunate, because that's the ones that we rely on, to make a lot of our trading decisions on, and we weren't ever able to actually validate any of our ideas. So that became a big issue for us. So even worse, if we ever wanted to know if it actually worked, we'd have to backtest by hand. How many people here have ever backtested a strategy by hand? Go ahead and let me know in the chat room. It takes forever to do. And not only to backtest it, but if you ever wanted to optimize an indicator like the MACD has 28,000 possible combinations. You can imagine trying to run through every single one. It's just impossible. So it would take a lifetime, and we kind of came to the conclusion, like, there's no wonder that nobody knows whether these things work or not, because it just takes too long to do it by hand, and there wasn't really a good way of doing that. So we kind of all came together and we thought that, hey, maybe if everybody in our community pitched in a little bit, we could get some engineers to build us a really great backtesting program so we could start validating our ideas before we traded them. And so we kind of took the gym membership approach. When you join a gym, You know, most people don't have $500,000 to spend on a bunch of gym equipment, but you know, for a little bit of money every month, you know, they can get access to all this really great equipment, and then everybody benefits. So we kind of took the same approach, and everybody pitched in. We hired some really, really great people, and it's taken a long time, but we did finally build it. And in 2016, we finished our backtesting program. And today we're actually going to use it to find some of the #1 swing trade strategies for Apple. If we have time, we'll go through some other stocks. I'm really a specialist in Apple. I've been trading Apple for about a decade, and there's actually been a couple of years in a row where I only traded Apple as a specialist. So we're going to kind of start with that. But definitely, if we have time, we'll cover some other tickers for you as well. And to do this, we're going to use my 3-point checklist. Okay, so let me see any questions. Okay, cool. So here's the 3-point checklist. Okay, first step is to confirm short-term momentum, and I'm going to be going through each one of these in a lot more detail, so don't worry, because this is pretty vague. But the first one again is to confirm short-term momentum, and I've got a tool that we're going to use for that you can pretty much get anywhere, but I'll give it to you. Okay, step 2 is confirming long-term direction. And this is going to help us avoid pump fakes in our swing trading. Step 3 is to look into the future with seasonality so that we can actually be a month or two ahead of the game. Most of the trades I make, especially with Apple, I have planned for at least a few weeks ahead of time so that there's no surprises. Like, I'm not waking up in the morning and being like, oh my gosh, today is the day I'm buying Apple or shorting Apple. No, it's very, very planned out. There's usually no surprises, and I get to plan my trades well ahead of time, which helps me and my management, of course. So let's go ahead and talk about confirming short-term momentum. And to do that, we're going to talk a lot about mastering that 4 to 8 day swing trade. And I call those kinds of trades payday cycles. And to view a payday cycle, we're going to use a Heikin-Ashi chart. Has anybody here ever used a Heikin-Ashi chart before? You can go ahead and let me know in the chat room if you have. I'm on the Wall Street AO platform now, so you can see we have our own charting library and everything like that. You can see right now we're looking at candlestick charts. Okay, so how many people here have used a candlestick chart? Hopefully most people here have used a candlestick chart. Now I'm going to come over here and I'm going to select the Heikin-Ashi payday cycle chart. And so you can see it's a different kind of chart. Go ahead and let me know in the chat room, what's the first thing that you see that's different? And I'll flip back and forth a couple times between the payday cycle and the candlestick chart. What's the first thing that you notice that's different? Okay, a lot of people say smoother trends, there's no gaps. It's a little bit easier to see direction. So what I find is that it's a lot easier to see 4 to 8 day cycles as far as the directionality of a stock, because it makes it really easy. It's black or white. It's either green or it's red. It's a lot easier to see short-term momentum. And what we found is a lot of these tech stocks that we like to trade tend to cycle in one direction for 4 to 8 days at a time. So it's been my job as a swing trader to be able to get in, towards the beginning of these cycles, right? So that we can catch these cycles in the beginning, and then we can get out before they cycle down. So we have bullish cycles, right? And then we have bearish cycles. And it's just a lot easier using a Heikin-Ashi chart to be able to see those, okay? But it's going to change the chart a little bit, okay? And as people have posted in the chat room, there's a few differences between the charts, okay? So I'm going to go ahead and open up that again real quick just to make sure I didn't miss out on anybody's questions. All right, Michael says there's more trend and it's less volatile. Richard says, what's a Heikin-Ashi? It's just a kind of chart. You can find it pretty much on all brokers' charts should have the Heikin-Ashi chart that you'll be able to get for free. We built the Heikin-Ashi chart into our Wall Street AO platform for backtesting and everything like that, so that our members could use it, but you should be able to find it anywhere, okay? All right, Richard says there's no spikes in the bottom or the top. Yeah, it's a little bit different because the candles are kind of set up a little bit differently. So I use these to help me gauge short-term momentum, because these kinds of charts make it really easy for me to see when momentum to the downside is shifting and we're starting a new bullish payday cycle. Now, I have no problem shorting Apple or buying Apple. I will go either way with this stock because I've been trading it for so long. So again, we can trade bearish cycles and we can trade bullish ones. Here's my 3-point checklist for trading a reversal with a payday cycle. So if you have a notebook, this is a great time. Go ahead and write this down, okay? The first time we see a higher daily high, which means today's candle went higher than yesterday's candle, okay? And this is a daily chart. Okay, so that's the first metric. Okay, have we hit a new daily high today? The second one is today's low higher than yesterday's low? So have we hit a new higher low? So have we hit a higher high? And have we hit a higher low? Those are the first two metrics. The third one is, are we closing at a new daily high? Because that's when we have some good momentum that we're actually closing there. And as long as those three things are true, you're generally safer to be long during a payday cycle, which are these again. A payday cycle is a 4 to 8 day trend in a stock. As long as we're making new daily highs and even better closing at new daily highs and also hitting higher daily lows, you're a lot safer to be long these cycles. Okay, everybody with me so far? Bada boom, bada boom. Okay, so let me answer this question real quick. Okay, cool. Everybody with me so far? It makes it a lot easier to visually see what's going on. Now, while trading payday cycles, because I've been doing it for many years, I found that there's a problem. Sometimes we get these pump fakes, right? A pump fake occurs where we have the start of a cycle, but then we don't really show any follow through, and it only goes in your direction for a day or two. But essentially, a pump fake I would consider to be something that only lasts a couple days and doesn't really show a lot of follow through. So what we did is we are looking for a secondary rule that will help us eliminate pump fakes. Okay, a secondary rule that will help eliminate pump fakes. So I'm going to come back to my slides here just for a moment. And so you just learned how to use the payday cycles. I know I went through it quickly, but I've got a lot to cover today. Okay, so you just learned payday cycles quickly on how to identify short-term momentum. The next one up is confirming long-term direction. And remember, this is going to be the secondary rule that we use. Okay, and we're going to use it to help watch out for pump fakes. Okay, and for Apple, I like to use the MACD. It's really, really simple. Okay, how many people here use the MACD? I'm going to go ahead and just load up the MACD right now. Okay, and so because we have a whole backtesting program, we actually have found out a really cool thing about the MACD with Apple. And again, this is just your default setting for Apple MACD 1226.9. Okay, after backtesting this, what we've discovered, and this is really, really cool, and you could even write this down if you want, we've discovered that these bullish payday cycles, right, like this one, like this one, bullish payday cycles are longer when the MACD is also bullish, right? So I'll say that again. Bullish payday cycles are longer to the upside when the MACD is also bullish. And that may sound obvious, right? But that's what the data shows. It also shows that the bullish payday cycles, if you're only getting long, let's say, bullish payday cycles are shorter when the MACD is bearish. So if we're to break our swing trading down into two camps, we have safer and we have riskier, right? It's safer to be long a bullish payday cycle, which are these 4 to 8 day directional trends. It's safer to be long them when the MACD is also crossed to the bulls and trending up. And it's riskier to be long them when the MACD is crossed to the downside. Okay, it's pretty cool. Now, what our software allows us to do here is to actually backtest the MACD by itself. So let's go ahead and do that. So check this out. I'm going to go to candlestick here. Let's look at three years. And so right now, if we wanted to say, hey, Micah, how well does the MACD work for swing trading with Apple? Like if I would have bought Apple every time the MACD crossed here to the bulls and sold it every time it crossed to the bears, how well would I have done? And so we created this really great backtesting program that I mentioned called Smart Studies, which means every time we load up an indicator, we immediately see backtested results. So let's say I wanted to backtest the ADX or chicken money flow or any combination of moving average crossover or the MACD, or if I wanted to backtest payday cycles or stochastics, I can. And the way the results come through, check this out. This is really interesting. I think you'll like it. Is we know if we would have traded the MACD over the last 3 years, if we would have bought and sold only one share, we would have made $75. That's pretty good. We would have had 12 wins and 10 losses. Now, right off the gate, 12 wins, 10 losses doesn't appear to be that great. So it's not the greatest batting average. But I want to emphasize something that's really important that I think a lot of people get mistaken with is it's not always the batting average that makes a strategy successful. because the second data point that our software gives you is the average win and the average loss. So out of the 12 wins over the last 3 years, the average win was $8.59, while the average loss was under $3. So right there, you see it's got a really great risk reward, almost a 3-to-1, right? The average win is substantially bigger than the average loss, which is what makes the strategy work. It's not the batting average, because the batting average is really average, right? Just over 50%. The results box also shows you the average days. So when it works out, it lasts about 24 days. And when it doesn't work out, it only lasts about 7 days. So in about a week, you should know if the strategy is going to work or not. And then these little bars at the bottom represent the years. So you can see it's all green across the board except for a small losing year in 2013. Okay. Lastly, we wanted a way to create a visual trade log. So whenever you load up an indicator that you're backtesting in Smart Studies, we shade on the charts for you exactly where you would have gotten in and out using this indicator. So if you follow these shaded regions down, they're going to line up perfectly where the MACD crosses every time. And then you hover over them for a little bit more information about the trade. And we did this because a lot of backtesting programs just spit out a big log of trades. And for you to correlate that trade log with a specific time frame in the stock, you kind of have to spend the time plotting it out, which can take forever to do. And so we're like, well, let's just create a visual trade log for how well the strategies work so that we can actually look on the chart to do that. Okay. Everybody with me so far? So off the gate so far, you've learned payday cycles, right? The 4 to 8 day directional trends that we use the Heikin-Ashi chart to see. I've told you that from our back testing, we've discovered that payday cycles are longer to the upside when the MACD is also bullish, right? And then we also just back tested the MACD by itself, which by itself is a pretty good strategy. Okay, so I'm going to go to the chat room real quick just to make sure there's no questions for me. Okay. Richard asks, what is a Heikin-Ashi? A Heikin-Ashi is a Japanese candlestick. Okay. And I gave you the spelling of it so you could look it up on Investopedia if you like. Okay. All right, great. Okay, cool. So everybody with me so far on backtesting the MACD and using payday cycles? Now, what's really cool about this is if you ever want to adjust the settings of your MACD, right? So let's say instead of using the 12.26.9, you want to use, let's say, the 15.26.9. Well, anytime you change a setting on an indicator, we immediately backtest the results and give you new results. So keep your eye on this box here for a moment. Do you see how that changes right away for you? And so the reason I want to highlight this is because when we were building this program, we had a really big breakthrough in the technology when we were building it. Most backtesting programs, whenever you want to backtest something like, let's say you're like, okay, show me how well the MACD has done on Apple over the last 3 years. You have to plug in your query and then ship it off to a server, right? And then that server will get back to you. It generally takes a day and can sometimes take a long time to get those results back. And then again, you just get it in a trade log. So we had a breakthrough in our technology where we're actually able to instantly backtest most of the popular indicators. So let's say you want to know if the stochastics work with Apple. Well, we'll backtest that for you immediately. Let's say you wanted to say, well, I don't want to just use the stochastics. I want to use the stochastics, but only when it's above the 50-day moving average. Well, we'll stack these two things up and instantly backtest it for you. But let's say you're like, well, I want to use the ADX, but only when the stock is above its 200-day moving average. Well, we'll backtest that for you too. So I only show you this because it's a really cool piece of tech that we built that allows us to instantly backtest any of our ideas. So just out of curiosity, what's a moving average crossover that you use right now or that you heard on the internet that's a really great moving average cross? So go ahead and let me know in the chat room. What's a really good moving average cross that you know? Okay. What's it? Okay. Michael says the 50 and the 200. Okay, so let's check that out. So 50, simple, above the 200. For Apple, if you would have used this, you would have had 4 trades in the last 10 years. Not a lot of trading, but it looks like it was pretty profitable. Another one that comes up is the 8 EMA above the 21 EMA. So a lot of people use this. They're like, Micah, I heard that if I buy when the 8 EMA goes above the 21 EMA, that's a good strategy. Okay, so how well has this worked for Apple? Nah, terrible batting average, 19 wins, 37 losses. You can kind of zoom in here. Average win is pretty high compared to the average loss, and that's why it's profitable. But it's not the greatest strategy. Let's see how well this does for SPY. So we could backtest 8,000 stocks and ETFs in our system. So you could see if you would have used the 8 and 21 EMA, you would have made money the last 2 years, but lost a lot of money in 2015. You would have made money for these 3 years, but lost money in 2011. So it's kind of an average strategy. In 10 years, you would have made less than 40 bucks. So it's actually, I don't know, the 8 and 21 EMA may work for some stocks, but not all of them. And so that's why we're backtesting individual tickers with strategies, because every stock trades a little bit differently. Okay. Let's see what else we got going on. Yeah, 13 EMA over 50 EMA from Joe. Okay, so let's see here. 13 EMA over 50 EMA, Joe says. All right, so on the SPY, that strategy has worked pretty good. It's a longer strategy. You would have made money this year, but you would have lost money the last 2 years, unfortunately. Let's see how this has done with Apple. Not so bad, not so bad. Profitable this year, not profitable in 2013, but it's pretty good for longer term strategies. So yeah, this one's been validated for you. Okay, so how helpful is it for you to be able to plug in an indicator or a moving average crossover or anything that you want and have instant validation? Now, what we also find is a lot of people come to us with these strategies they hear on the web, and we plug them in and they don't work. And we're like, whoa, you shouldn't trade this strategy. It's never really been profitable. If you heard this on the web, I probably wouldn't be listening to that person anymore because we've just completely debunked it. So think of this as like a transparency platform. You're able to plug in things and see if they're valid strategies or not based on different time frames and different ways that stocks trade. It's pretty cool, okay? So kind of coming back to Apple and the MACD, again, we've learned that the MACD works pretty good. It's a pretty good strategy. It's one of my favorite strategies, okay, for Apple. Right now, if you would have been using just your default strategy with Apple, you'd be up about $20. Not bad, okay? And again, what I want to highlight for you is the average win at 859 and the average loss at 272. Okay. Now, what we found is that you can tweak and adjust your settings, and they make a pretty big difference in how profitable you are with an indicator. Okay. Now, it kind of comes up to another problem, though. The other problem is I can sit here all day long and change one thing at a time and try to remember which one performed the best. And as I mentioned earlier, there's about 28,000 possible combinations for just the MACD alone. It would take me forever to try and do it, okay? It would take me forever to try and backtest it, okay? So what we did is we built, on top of this instant backtester, we built a processor that allows us to process through to find the #1 settings for any, for the most popular indicators for any stock in our 8,000 stock database. So I'm just going to go ahead and start this right now. Okay, and so you can see it's already running. Let's see here. It's already running. And since I pressed start, we've processed through 3,000, now 4,000, now 5,000 of the 28,000. So you can see how fast it's doing. Think of it as like a giant math machine that's going through and processing through every single possible combination of the MACD for Apple. And in the end, it will tell us what the best settings are to use for Apple. Okay. Now, we've already run this for Apple. In fact, we've already run our super processor against about 250 stocks and lots of indicators. So as a membership, you don't get access to run the test, but since we've already run all the tests as admins, we give you access to all of our test results. So if you wanted to know what the best settings are for Apple MACD, I can give them to you. That's 14, 31, and 10. Okay, write this down. If you trade Apple, write this down. Use 14, 31, 10 as your settings for the MACD. It's going to be a lot better than the default. Notice what it did over here to our average win and our average loss. Remember, our average win was over $8 and our average loss was $270. Now with the optimized one, we're averaging over $10 and the average loss is just over $2. So whenever you alter a moving average or whenever you alter the settings of your indicator, you should have two goals: to increase your average win, which we've just done, and decrease your average loss, which we've also just done, right? So by fine-tuning and adjusting your indicator settings, you can actually have much better results. Everybody with me so far? I'm going to take a moment in the chat room and just make sure I've answered all the questions so far. And if I didn't get to your question, I apologize because we got a lot of stuff coming through. Bum-ba-da-bum. Okay. Let's see here. All right. Got a question that says, can you test over different types of markets? Yeah, actually you can. That's a really, really great question, and you can, and here's how you do that. So whenever you have an indicator up on the screen that you're back testing, you can toggle a shading on, and what I would do is I'd get rid of the time frame of 3 years, and that way you could look at all 10 years of data, right? And then let me grab my pointer tool. What you could do is you could basically go like this. You can go back over time and see exactly how the stock has traded with this indicator over different periods of time, right? So right now we're looking at the 1431.10. Not the greatest strategy in 2012 to 2013. Had a series of losses. So you can go back and see how well did this strategy perform during different times of trading history. Okay, it's called a visual trade log. So we're the first ones on the market that have ever created an instant backtester and a visual trade log for our members. And again, this is all because we just wanted to have more transparency around the strategies that people were using, because we were tired of hearing people coming to us being like, hey, so-and-so Joe Schmo from XYZ website told me that I should use this moving average cross, and I have no idea if it works or not. Well, let's go and find out if that works or not. And that was really our mission and what we accomplished here with our tools, okay? But good question so far. So let's go ahead and go back to the slide because we kind of deviated for a moment, but that's cool. So again, step 2 was to confirm the long-term direction, which is to watch out for that pump fake with the MACD, right? So the first 2 steps alone are going to help you make more money, just like a student of mine did. And again, if I could help you with one thing today, it's how to stay out of trouble. And if we look at our results again from Apple and Payday cycles and just the MACD by itself, and we can conclude that it's safer to be long Apple during those bullish Payday cycles when the MACD is confirming, and it's riskier to be long Apple when the MACD is not confirming, then we can at least eliminate a lot of those losing trades out of our trading. And that's really the goal for us, is to stay out of trouble and make more money, right? I wanted to highlight a student of mine because he has a really incredible story. His name is Marco. He's from Redondo Beach, and he wanted more consistency in his trading. His account was flat for several years in a row, and he'd make money, he'd lose it. It was a classic story. He sent me this screenshot a couple months after he joined Wall Street AO of his account, basically showing he'd make 20 grand, he'd lose 30 grand, he'd make 10 grand, he'd lose 5 grand, he'd make 20 grand, he'd lose 30 grand. This day was when he joined Wall Street AO, right here, and he had a huge breakout in his profitability, okay? So he made over $120,000 in 2 weeks trading Apple and Alibaba Payday cycles. So now he trades Apple and the FANG stocks, which are, Facebook, Amazon, Netflix, Tesla, using MACD and Payday cycles and confirmation. I just got this email from him a little while ago. He says, I'm trading Apple, Netflix, and Tesla, all opened right before the MACD crossed. He's actually getting good enough where he can see the MACD crossing and get in a day or two early. He says, I got it right before it crossed the bulls. I'm using Payday cycles and the MACD in all 3 trades, and I'm doing awesome, obviously. Right, so I wanted to highlight this because he had a huge breakthrough in his profitability. So I know briefly earlier I said, hey, I'm Micah from Wall Street AO, but I wanted to introduce myself real quick again. So I'm the CEO of Wall Street AO Community, expert stock and option trader. I'm a husband, father of twins. And my big thing is that I help traders get through that profitability curve, just like with Marco. And we do it by using strategies that have actually been validated, right? There's a lot of people kind of swinging from the hip, not really validating or backtesting their trading strategies. And so what we do is we help them by debunking things that they potentially are doing that aren't working or have never worked, and by focusing in and hyper-focusing in on strategies that have been successful. It may sound obvious, but I mean, you'd be surprised, right? So here's me in Chicago. You probably heard of Tasty Trade. I was there hanging out with everybody. Here's me right here. And here's me teaching at a Phoenix Traders group. And so when people ask me what I do, rather than saying, oh, I'm the CEO of the software company and I'm a trader, I say, I help traders break through the profitability curve by using validated strategies. So here's what that breakthrough looks like in real life. A breakthrough of profitability curve looks like this. You're flat, make money, lose money, and then you have a breakthrough in profitability. That's exactly what that looks like. So I've coached students who are actually down over 300 grand, and in 18 months, they made it all back, plus an extra $500,000. In fact, I checked back in with this guy, and he was up $2 million at one point. It was a pretty remarkable story. So I want to use some of the information that we've just collected to kind of build the snowball of analysis as we move into step 3 of my confirmation checklist, right? The first one was using payday cycles, the second one was using MACD, and the third one is going to be using seasonality. Remember, all of these things we're backtesting and validating along the way to make sure that we're actually using something that works. Because the last thing I want to see somebody do is use some random thing they hear on the internet that has never actually been profitable. Okay, so we're going to use seasonality to stay at least a couple months ahead of the market, and I'm going to show you how to do that right now. But first, I just want to make sure there's no questions lingering. Cole asks, could you do the same thing with the MACD on oil futures on a 5-minute chart? So right now we're mostly, that's a great question, Cole, but we're mostly backtesting daily charts for swing traders because that's kind of the emphasis of our community at the moment. At some point in the future, we'll have intraday data to backtest intraday stuff. So I would say that if you can backtest it and validate it, yeah, absolutely. But until you can do that, until you can backtest and validate it, I don't know. I'm not sure. So we're not doing intraday data yet, but good question so far. Okay. All right, cool. So let's kind of move on to seasonality. How many people here have used a seasonality chart before? Go ahead and let me know. So right now what we're doing is we're looking at a seasonality chart that our engineers made for our community. And we're looking at the last 10 years of data. Okay. Which months for you kind of stand out as months to be unnoticed for Apple? And again, you could, in our software, you could look at seasonality for all 8,000 stocks and ETFs. Whether you want to trade SPY or Qs or oil or whatever you want to trade, we have seasonality charts for you. Okay, so here's 10 years of data for Apple. I'm going to even zoom in even a little bit more to 5 years. Again, what are some of the months that really stand out for you? For me, it's June, September, October really stands out as one of the most bullish months of the year for the last 5 years. Right. July and August are usually pretty good. August is good, but not as good as July. But June and September are pretty bad usually. Right. And then October is obviously really good. November is usually pretty good. And then we see a seasonal slowdown in December, which is counterintuitive for a lot of people because they think they want to buy Apple in the beginning of December as it ramps up to Christmas. Remember, the stock market's a forward-looking mechanism. So people who are buying Apple in December are like 2 months behind, right? 2 months behind. Can you see that now on the seasonal chart? So seasonality allows us to stay a month ahead of the game. So let's kind of analyze this for a moment because I think it's really important. Let's start with June and just go through the rest of the year, okay? So here we go with Apple again. Let's highlight June trading for Apple. Here's June. Remember, June is a bad month, one of the worst months of the year for Apple. Let's go right there, actually. So this is what Apple did in June. It had a nasty sell-off and then compressed. Okay. Now, remember, we had this seasonality information that June was bad. Like we knew June was bad in April and May. So towards the end of May, guess what we were kind of preparing for? We were preparing for a sell-off, right? So we're selling our longs and preparing to get short the stock. And here's what's really cool. It kind of handed us over a slam dunk on this one because check this out. Right before June happened, the MACD crossed to the bears. So about a week before June, the MACD is bearish. And what do we know from our backtesting data? We know that when the MACD is bearish, it's riskier to be long, right? So in the very least, you'd be exiting your long positions. And if you're aggressive like me, you'd be shorting the heck out of the stock because the MACD is bearish. We're starting bearish payday cycles. And here's the other thing that's cool. What happens in June? We have a worldwide developers conference. So our seasonality tool allows us to hone in on weekly seasonality. So check this out for June. The second week of June is where the majority of the big selling happens for Apple on a weekly basis. And that's exactly when the Worldwide Developers Conference is generally for Apple. So very interesting little weekly seasonality there for you. And guess what? When you look at this chart, guess when this big down day happened? you probably imagine. This big down day happened the week of the Worldwide Developers Conference. Okay, so we kind of start to add these things up, right? We've got payday cycle information that helps us visually see the short-term 4 to 8 day trends. We have the MACD for Apple that allows us to find riskier and safer trades, and also gives us some emphasis on directionality. And then we have seasonality, which allows us to kind of map out the next month of trading to see approximately how it generally goes. Now, when we go back to seasonality again, we know that July is oftentimes really, really good for Apple. So is August. August is good, but not as good as July. So check this out, right? As June was coming to an end and it was basing, guess what we were preparing to do? We were getting prepared to buy Apple at the end of June and the beginning of July because we know July is pretty good. But here's the thing, I don't like using seasonality in a vacuum. I like to make sure that payday cycles and the MACD are confirming for me. So let's go ahead and see. The first week of July, we started a new bullish payday cycle, right? Which happened right here. At the same time, the MACD crossed to the bulls. And so guess what I was doing? I was like accumulating as much Apple as I could, right? Because all the stars were aligning for me. I had a great short in June. The end of June, I was preparing to buy Apple. It was already basing sideways, hitting support. We had a beautiful payday cycle that started. And like the Apple gods just handed this to me because the MACD crossed for me right in the beginning of July as well. Okay, now July was good, and so was August. August wasn't as good as July, but again, you know, usually pretty good. So there's your July and August trading for Apple. Okay, now let's fast forward again to seasonality. What are we expecting in September? We're expecting a pullback in September and then a rally in October. Okay, so let's go ahead and see what happened in Apple in September. Well, we topped out right here perfectly. Here's September trading like to the T. It's almost kind of crazy actually how well this worked. Right, there's your September trading. Sell off in September. So at the end of August, we're prepared for September sell off. So we're selling our bullish positions, starting to develop a short position, and we just started to fall off the cliff. Right, and guess what? The MACD gave it to us as well because the MACD crossed right in the beginning of September as well. So I hope you can kind of start to see all the pieces coming together in my 3-point checklist, right? Payday cycles for short-term visual, MACD for long-term confirmation, and seasonality, which helps us kind of plan for the month ahead of time so that we're not caught off guard. Because the last thing I want to see anybody do is be like, oh, well, Apple's been trading so good in July and August, like I'm just going to keep holding my calls through September because it's been trading so good in July and August. Like that's the worst thing that you can do. You got to kind of stay ahead of the game, right? And that's what these tools kind of allow us to do. Okay, so at the end of September, knowing that October is one of the bullish months of the year, most bullish months of the year, guess what we're planning at the end of September as we're basing? Well, check this out. In the beginning of October, we started to get some basing. We started to make higher highs as given by my 3 metrics. And guess what also happened? Right in the first week of October, we had a MACD cross to the bulls, right? And here we are. 1 month later, 20 points higher. So I hope you can kind of see now how you can actually plan your trades out like weeks ahead of time. You know, we don't want to get caught off guard, and I certainly myself, because I'm a swing trader, I don't like to wake up in the morning and just say, oh, I'm just going to find a trade randomly today. No, I like to be a little bit more prepared than that, and I like to plan my trades potentially a couple weeks ahead of time if I can, and then I like to confirm them using these indicators. Okay, pretty cool stuff, right? Let me go to the chat room and make sure there's no questions. Everybody says pretty good. Okay, let's see here. All right, everybody's good. A couple of questions about seasonality. Yeah, good question about seasonality. So here's the thing again about seasonality is I don't like to use seasonality in a vacuum. Let's say seasonality is saying December is, or actually it is, December is generally a bad month for Apple on the seasonality, right? But what happens when the MACD and payday cycles are still really, really bullish in December? Do you think I'm going to be shorting it? No way, right? I don't use it in a vacuum, but you use it as a confirmation, right? Think about an idea of probability stacking. Probability stacking is when you take multiple data points that have been backtested and validated, and when they all line up, then you get something really, really good. But I don't personally take seasonality in a vacuum, but that's a really, really good question though, okay? All right. Any questions? Any other questions so far? I think we're good. Just want to make sure we have time. So you've just learned our simple 3-point checklist for making highly optimized trades. So in the beginning of today's presentation, I said we're going to be focusing on optimized trades, and I hope you now have a little bit of context for what an optimized trade looks like. So you learned my 3-point checklist, which is confirming short-term momentum, confirming long-term direction, and then using seasonality to kind of look into the future to help pull those trades towards yourself. And when they all align, you get these really great trades, okay? So again, I hope you now have a clear distinction of what an optimized trade plan looks like versus kind of like a shooting from the hip, just kind of guessing or using some random thing that you heard on the web. So I wanted to highlight one of my students real quick, Lisa D. Lisa struggled finding good entries and exits, and she joined Wall Street AO in 2015 with zero knowledge of technical analysis. And by creating a routine, she had a stunning 86% success rate in 2016. She was a trader, right? She just came in hot. She made 197 trades that year, 171 winners, and she grew her account from $100,000 to $320,000. And Lisa says, before entering a trade, I always refer to my charts, seasonality tool, and smart studies to backtest it inside of Wall Street AO. Pretty remarkable trader, stay-at-home mom, like incredible story here. Okay, so what else can you do with our tools? You can answer the following questions. What's the #1 moving average cross for Apple? #1 MACD for Apple? Stochastics for Apple? ADX for Apple? You can look at all these #1 settings, not only for Apple, but for any stock in our database, which is about 8,000 stocks and ETFs. Then we've created this whole notification system. So our platform tells us when these strategies are starting and stopping, making for the ultimate swing trade notification system. So like Wall Street AO sends me a notification saying, hey, that MACD that you liked, it's starting today. Or hey, that MACD that you liked, it's ending today, which is important. Kind of helps you stay, right? So for Apple, I created what I call the favorite 5, which are 5 great Apple strategies and email notifications. And here's what it looks like, basically a notification. And basically tells you when a strategy is starting and stopping. And to date, we've tested over 179 million Apple strategies. And these are my favorite 5 strategies. Okay. So if you don't like Apple, we've created our top 10, which are 10 stocks that have been trading really well. And we've run our processor against these 10 stocks to find great strategies for them. Okay, so we call it our top 10. So the top 10 is a list of carefully curated stocks that have great strategies discovered through Prometheus, our super processor. Just like the Apple strategies I showed you today, with the top 10, you get daily email notifications telling you when each one is starting and stopping. So the email is sent out Monday through Friday, an hour before the market closes. I'm starting to talk a little bit fast, but I'm afraid of running out of time because I only have a few minutes left. But basically, it all comes in an email and a portfolio dashboard for you. So as a special bonus for anybody who wants to come and join us today, you're going to get my favorite 5 Apple strategies in our top 10. Okay. So you also get all the other benefits of a membership, which is the top 10. You get smart studies, which is unlimited backtesting on all 8,000 stocks. Leading strategies, which is access to our results from all of our tests. You also get access to our university, which is a whole stock and option university. Got this great email from Matt Webb. He says, thank you so much for providing an amazing platform. Since joining Wall Street AO, I've tripled my option trading account and I'm still learning so much. Okay, so here's what the pros are saying. We don't just have retail traders using our platform. I got this note from a new member. He says, what you and your team have built is pretty incredible. We began using it as a company, and since our membership started, I haven't been able to put it down. And these folks have $200 million in managed assets, and they're now using our platform to validate their trades. Pretty incredible. So our membership's usually $200 a month, 197. I was trying to come up with a way to help everybody out today. So I was like, okay, well, let's just knock the membership in half. So for $97 is the membership for you today as a special thank you for coming to today's membership presentation. And the discount for you stays with you as long as you're a member. So it's going to be $97 grandfathered in. Okay. Here's something that's really, really cool I like to do for people. For the first 10 people who sign up right now, you're going to get a free one-on-one call with me. You're going to find out exactly where you're stuck right now in your trading. You're going to develop an action plan and roadmap to profitability. And you're going to get a tailored walk through our platform design to make sure you get the most from our tools. Okay, so you can go to wallstreetao/register. And I think the link has been put up, but let me go ahead and do that if it hasn't already. Bum. Thank you, Renee. Appreciate that. Yeah, she just put the link up for everybody. Okay. So we're going to use the same roadmap in our strategy call that I helped one of my students turn a huge loss into a massive gain. And it also comes with unlimited backtesting on all the stocks in our database. So again, just to kind of recap that for you. Unlimited backtesting, leading strategies, access to our university. You're going to get my favorite 5 plus training, and you're going to get a pretty big discount at wallstreethouse/register. I just checked in with my merchant right now, and it looks like 7 people have actually already jumped on this deal. So you're going to get that call with me. During that call, we're going to jump into the trader discovery sheet. So this is one of the really cool benefits of the call, is rather than just doing a glossed over idea of like what you're up to and what your hurdles are as a trading, what we do is we go through a trader discovery sheet, which is, let's see, all right. A trader discovery sheet, which is basically going to help us pinpoint the areas of your trading that you need the biggest hurdle. So I look forward to having you come and join our membership, and come and join me. If you're on the fence right now, this is your opportunity to get a strategy call with me and join what we're doing.